Welcome back to Tech Tune-Up, our weekly show here on Benzinga's YouTube channel. Please like us, subscribe to us, and consider Benzinga Pro Tools. I use them. You should use them too. So today is June 3, 2025. On this program, we're together for about a half hour. I give you what I think you need to know, either directly or indirectly in my tech sector. I give you a fresh tech buy list, and then I finish with some tech trends that might be useful for any investor, even beyond the tech sector. And if we have time at the end, love to answer a couple of your questions. So let's get to the first part of the program, the stock tells. First of all, CoreWeave. You may recall I have been talking about the stock since it was a private company. It's now been public for just about 2 months, and the stock is up almost fourfold. Down at the bottom of the screen, it says threefold, but the stock is up another 17% today. So we're getting close to the 4X. So they just signed a big deal to lease data center space from Applied Digital. It is a big contract, not necessarily for CoreWeave, but for APLD. But anyway, for both companies, it's a sign of good things to come, that AI data center build continues. However, since I'm a owner of the company when it was private, I cannot sell until 6 months after its IPO with a lockup. So I can't sell a share until we get to almost October. However, since this IPO 2 months ago was at 40, and now the stock's at 141. Maybe if you have the flexibility and you own the stock, you should look to trim some of your shares, because obviously, no matter how great the company is, no matter how great their prospects, you probably should sell into parabolic stock moves. Anyway, that was a very good pick right here on Tech Tune-Up with Paul Meeks. Next is CrowdStrike. This is very interesting. It's always been my favorite cybersecurity play. I guess the time to buy it would have been about a year or so ago when they had the big cyber breach. Now, lawsuits are going back and forth, even currently. So there is some legal risk that they may have to pull a few shekels off their balance sheet to pay Delta Airlines in particular for the cyber breach. But the stock has been doing quite well regardless. And tonight they report their earnings. I will be on that call live, as I always am. But I tell you, the stock has had such a great move that I think a lot is baked into that stock price, maybe too many goodies. And so I don't want to buy that stock ahead of the call. Let's see what they have to say, and I'll be back to you with a full report next week. We can't have a show without a bunch of more news from our buddy Elon Musk. His Neuralink, the private company, $650 million in fresh funding. Starlink, which is the crown jewel of SpaceX, which I actually think, as it pertains to his wealth and it pertains to investors' wealth, that company, when it goes from private to public, will probably be a more interesting investment to me, regardless of where Tesla shares are trading at that time. I think it has a longer runway, bigger opportunity. So unfortunately, their Starlink rocket, which is supposed to someday take us to Mars, blew up again. I think it was the third or fourth time. The other big news, of course, is Elon leaving his buddies in DC behind, exiting Doge, and going back to Tesla. Probably a good thing for Tesla shareholders. Remember when he originally head up Doge, they were supposed to carve out $2 trillion in federal expenses. It looks like at the end of the day, they get to 150 to 160 billion, which is about 8% of the original promise. So depending on how you feel about Trump and Doge and Musk, was that a success or a failure? It definitely was well below original expectations for savings. This is very interesting. Broadcom has a quarterly report this Thursday. However, I haven't seen the newswire yet, but it's supposed to have a big announcement today. If you have a big announcement, why would you do it just 2 days ahead of your quarterly conference call? Anyway, a little bit weird. I hope it's positive, but we'll see. Of course, that stock has always been on my buy list. I very much like the quarter put together by Snowflake. I might have mentioned that last time. That stock is expensive, but I still like it. They made a pretty small acquisition this week, $250 million. Not that much of a needle mover in my opinion, but I like Snowflake for its own fundamentals. Next, we have information from Meta. Of course, we always do, one of the Mag 7 members. They are in a long-term nuclear energy contract with Constellation Energy Group, a stock that has been on our buy list in the past. This is very interesting. I've always told you that there is a chance that AI starts to disintermediate traditional search revenues from the like of Alphabet and could even put a dent into the digital advertising revenues for Meta. Now, without a lot of fanfare, because they probably are very wary about this themselves, but they have created an app so advertisers can use AI to not only create ads, but to target them. This could be a new paradigm. And I guess if AI really takes off, and all the indications are that it is an absolute game changer, if Meta and Alphabet do not jump on this bandwagon and embrace it and just find their traditional digital advertising business disintermediated by AI, they will be screwed and their stocks will fall, not a little, but a lot. Next is Palantir, a company fundamentally I've warmed up to over time, but its valuation is egregious. And here is a real tell. Palantir is getting heavy insider selling from its CEO and other senior members of the management team when the stock gets to 125. Right now, the stock is in the low 130s. So what I'm telling you is, if management is selling, and they're selling in pretty big volume, at 125 plus, the most concentrated selling was between 125 and 128. Don't you think you should too? Maybe not sell all your position, but trim it. Because no matter what the talking heads say on television, if you have insiders who know the company better than you or anybody else, if they're selling their own shares, you should probably at least step off the curb for a while. Next on Alphabet. So Alphabet, I don't know if you've been following the news with the regulators and the district court, but they soon could pronounce what is going to come of the antitrust suit against Apple and Apple Search. I mean, not Apple, sorry. Alphabet and Google Search. And so think about this. Any day now, you might get a message in your newsfeed that this company is going to be forced to break up. It might be forced to spin off YouTube. It might be forced to spin off their very lucrative ad tools that they bought many decades ago. So anyway, this could be a real game changer for Alphabet. And I don't think this news story gets enough press because they have been proven guilty in a court of law. And we're just waiting for the verdict. What's going to happen? What's going to be the remediation? Stay tuned. I think it's very interesting that OpenAI is so much in the news. And I will tell you, I try to read very interesting insider tales of all my favorite covered companies. I recommend this for your summer reading list on the beach. There's a book published called Empire of AI. The author is Karen Hwao, H-A-O. I have started to read the book. An interesting tale, not only about OpenAI, which obviously is the king of AI, but also the evolution of the entire technology trend. Read that book. Very interesting. Next, Synopsys. Synopsys is a troubled company. There are two companies in electronic design automation software, EDA software, which is software that is used for semiconductor engineers to design their chips. So they're very key in the semiconductor supply chain. So Synopsys announced that they have to pull their guidance for the rest of this fiscal year because the Trump administration is going to restrict, actually prohibit EDA software sales to China. and China is a very big geographic customer. And Synopsys mentioned this the other day. They had to because they were at the confessional, which was just a couple of days, their quarterly earnings report. Their key competitor, Cadence, which is a stock that I've liked, CDNS, they have not had a recently quarterly statement, but today at 1 p.m. Eastern Time, they are going to appear at a Bank of America Investors Conference, and there is no way the CEO or whoever is going to represent the company at that conference is going to avoid that question. Will Cadence, during that conference, in just about an hour or so, will they also pull their guidance for the year? If they don't, and they somehow can skate around this, and Synopsys cannot, Cadence has come down so much in sympathy that that stock might be a better buy. So all we have to do is wait around for about an hour, hour and a half today, and we'll find out. Salesforce.com is essentially back to its old bad ways. Salesforce.com, I think, is going to take a back seat in enterprise resource planning software. Think software for enterprises or corporations, because we have moved from software as a service to AI. They are at least at the beginning of this trend being disintermediated. And when I say they're getting back to their bad habits, is this company has never been much of an organic grower. It has only band-aided and increased total revenue growth by making acquisitions, sometimes very expensive acquisitions. And they just did this again. I think it's a sign of trouble, not a good sign when it comes to ERP software. I prefer the German company SAP, and here in the States, ServiceNow. SAP is the same as its stock ticker, and ServiceNow's ticker, NOW. Next, Dell announced their quarter. Actually, the stock, I was surprised, took a little bit of a hit, even though the numbers were pretty strong. The problem is Dell is seeing awesome momentum in AI servers. No surprise. But here's the rub, and I mentioned this on this broadcast months ago, is another firm that is in the mix selling servers that go into AI data centers is Foxconn. Foxconn in Asia is called Honhai. It's a company based out of Taiwan with manufacturing in China and elsewhere. And they exist, they flourish on a very skinny contract manufacturer's margin. If they are now selling their own private labeled AI servers, they'll sell a ton of them. Dell will sell a ton of them. Supermicro will sell a ton of them. And Hewlett Packard Enterprise will sell a ton of them. But the problem is, Foxconn, now in the game, is going to squeeze everybody on price because they love commodity sales. So unfortunately, we saw this in Dell's results. Great AI server unit momentum, but a pretty big downtick in gross profit. And I think it's because of pricing pressure introduced from Foxconn in Taiwan and mainland China. So stay tuned. I love the momentum there, but you know what? You got to have units and price. And Dell may have units, but it's getting squeezed on price. I'm staying away. Add to your summer reading list a book about Apple. It's called Apple in China, and the author is Patrick McGee. And I will tell you, this is a very interesting read. And not only does it talk about Apple's supply chain, which you should really understand, and the bottom line is get over yourself. There is no way in hell, with or without Trump's policy, that they're going to be able to deflect themselves from China. No way. And so that makes me continue to be pretty down on Apple. But the nice thing about this book is not only do we get a good understanding through the read of that concept, but also it's actually a pretty nice history of Apple if you're interested in one of the stories of one of the Mag 7 stocks. Let's now move to some of my tech picks. As I told you the last couple of weeks, I had been on a buyer's strike. Now I am buying selectively. And I have here in green what I consider my fresh money buys. If you're a tech or tech-oriented investor, I'd say I'll just highlight the things that are new here. I have been having an inflation hedge in my portfolio by buying a gold ETF. I was using GLD as my gold ETF. I don't like necessarily owning ETFs if I have a better stock idea that gives me the same exposure. So I'm swapping out the gold ETF, GLD, with a real company, ticker symbol RGLD, Royal Gold. I mentioned that I like ServiceNow and SAP, fairly recent additions to my list. I told you about Lyft recently. Excuse me if I have not. You know, I'm a big fan of Uber, and Lyft has always been horribly managed. But Lyft did bring in a relatively new CEO. He's been on board a couple of quarters, and there was a lot of low-hanging fruit there, particularly exorbitant costs relative to their sales level. They are starting to trim some of the fat, and Lyft is at a still, even though it's run up and they just announced a nice quarter, still a huge valuation discount to Uber, and it deserves a discount. But I think the discount will close a little bit to Uber. And so I own Uber, not buying it fresh right now, but I am buying Lyft as a relative value play. Fairly new is Intuit. Intuit's a relatively defensive place to be. Spotify, I haven't talked about in a while. Spotify, I've always liked their subscription model. I didn't like the huge money that they were spending on all these podcast hosts, but they have gotten a bit of more of a religion on that. And Spotify's had a couple good quarters in a row. And even though the company has been around a long time, they were actually operating at a loss until just the last 2 quarters. And so now that they're in the black, I'm more interested. I'd rather buy it on a dip, right? Because the stock is run. But I would say Spotify deserves your respect. And if you don't own any, maybe you buy more on a dip. But right now, I think it's a worthy of being in my tech crew. The next thing I would say is I'm interested in some non-US exposure. And so you see on the previous screen, I had ACWX, which is a all-world country index X the United States. And so that's the way I play some international exposure. If you've taken a look at how Europe has done versus the S&P 500 year to date, you may be surprised. They have crushed us. Anyway, I think I don't want to get into an investment too late, but I think that string might continue. And this is a decent way to play if you're not picking individual stocks. Also, the last thing I want to say on my buy list before we move on, I do have a new idea. It is a biotech company called Catalyst Pharma, ticker CPRX. Relatively cheap, big growth prospects, not 1, but 2, but 3 pretty profitable, fast-growing drugs introduced to the market. Some risk that one of those drugs will be forced into generic mode before too long. But anyway, CPRX has been performing well. I think there's still upside to the stock. So now let's take a look at my bullpen, my wait list. Nothing new here. Yeah, I would say a couple new ones that have popped after their quarterly announcements that got me super interested are the last 2 here, Zscaler, ZS, and UiPath, ticker symbol PATH. Great quarters, pretty bright prospects. Think that there's upside. However, they moved so much last week on their quarterly reports that they're only here on my watch list or bullpen. I'm not bringing them into the game unless their stocks drop a little bit. But those are 2 new ideas, pretty clean fundamentals. Just wait for them to dip. Next, let's finish up with some of the tech trends. So not a lot today. You know, I love to watch my rates, as I've told you a billion times now, that tech and other aggressive growth stocks cannot go up consistently unless rates are heading down. And, you know, we still have a lot of confusion what will the Federal Reserve Board, our central bank, do every 6 weeks with all the information it's accruing? Some of it is quantitative data, some of it is qualitative data. Of course, the backdrop to all of it is Trump 2.0. What are they going to do with rates? I think, and you can take a look at the CME FedWatch tool, that they probably stand pat on their benchmark interest rate the next two meetings. And maybe, just maybe, we get our first 0.25% rate reduction at the meeting of October 29. So think about it. If you've been counting on rates to drop, I know the president is always bashing Chairman Jay Powell to lower rates. He cannot really do that. He has to act independently, independent of politics. But think about it. If you're expecting rates to fall soon and they don't really fall until almost Halloween, could at some point cause a drop in the market, particularly with these aggressive growth names. So I think we're pushing back the rate cut. We'll see. And of course, a lot matters with what really happens around July 4th weekend when the 90-day implementation delay wears off and we attack some of these tariffs that the Trump administration is promising. The next, I think this is kind of interesting and really positive for some companies and really scary for other companies. Have you heard the term distilled? Not as an alcohol, but distilled AI. This is essentially AI on portable services or servers. Think about this as AI on device, where you can do AI queries locally rather than through the cloud or any other internet service. If this becomes a thing, then it's really going to change the game for consumer electronics. And the kings of consumer electronics today, folks like Apple, may not be the kings of consumer electronics tomorrow. Maybe the momentum goes in favor of who owns the large language model, a la OpenAI, versus who is supplying the hardware, just the device, to run those queries. You could have a shift from consumer electronics hardware to the large language models. And of course, who does that negatively impact the most, potentially? Probably Apple. So stay tuned for distilled AI. That's what it means. I still think that we're going to have a recession in this country just because of the damage of the back and forth dialogue with all our trading partners on tariffs. You know, we've had one essentially flat GDP quarter, maybe a little bit on the downside. Yeah, I don't think we're going to skate through 25 without a recession. But as I've said before, if we have a recession, I do expect it to be rather short, rather shallow, probably a buying opportunity. Because we also know when the market gets in trouble, and I'm not only meaning the stock market, but the bond market, Trump will come in, reverse a policy, because he does not like seeing wealth being destroyed in the financial markets. And also at some point, if the market carnage becomes too deadly, then Jay Powell, the chair of the Federal Reserve Board, will maybe speed up and lower rates to come to the rescue and not wait until that October 29th Fed meeting. This is kind of interesting. The OECD, which has global forecasts for both inflation and economic growth, today lowered their forecast for 2025 for economic growth, not only for the world, but for the US in particular. So right now, they believe that worldwide GDP in 25 will grow 2.9%. It's actually a pretty big drawdown from their previous estimate. But what gets worse is US growth this year will be below that, will only be 1.6%. And US growth this year only 1.6%, according to OECD, with inflation of about 3.5%. That is a bad trend. So anyway, stay tuned. If we do have the bloodletting, I go off the hanging out on the bench, refusing to invest in my huge cash hoard, which I have built, and I will get more aggressive on the next dip because I don't think it's going to dip far for too long. I don't think it's going to be the same kind of magnitude as we had with that really nasty week-long dip last April. So let's get to some of your questions. But before we do, last week, someone had a question about NU. And of course, I followed up, promised I would. Here I am. So NU, technically, when I say technically, I'm talking about the stock price chart. You know, it's had a monster run, but right now, at least the last couple of weeks or month, this chart looks pretty sick. So you definitely do not want to buy or add to a position on a sick chart. You need to see it, even if you like the fundamentals, stabilize. I don't know if holding a fintech stock like this one, particularly with international exposure, is necessarily a good thing to do right now. You know, its closest compare in the States is SoFi. So I'm not bullish on the financial sector. I'm not particularly bullish on fintech. And of course, this one is right in that. And also, as you know, because you asked me the question, and you did miss its EPS last quarter. And so, do you believe in the cockroach theory? The cockroach theory is if a company misses Wall Street expectations, it's like when you come down into the kitchen in the middle of the night, you flip on the switch, you see one roach, and you know that there's more than one roach. So what happens is a company misses its quarter. It tells everybody on the quarterly webinar that everything is well. It's just a temporary problem, but more roaches reveal themselves. And companies that miss a quarter sometimes have a streak of quarters in which they miss. And unfortunately, NU missed its EPS last quarter. So what I would do is if you've owned the stock, you've been great because it's been up a lot over time. I would hold it, or maybe not sell all of it, but trim it for opportunity cost in a better position. I definitely would not add to it here. So that being said, that was my carryover from last week. Do you guys have any fresh questions for this week? Any thoughts, VG as opposed to LNG? I know LNG pretty well. I can come back to you on VG. Unfortunately, the entire industry has been, sucked into the vortex of the, tariff and export control restrictions crisis. And so I'm probably not bullish on any of those names, but I've owned LNG in the past, been happy I did when the time is right. I don't think the time is right now. If you want me to, I can follow up and do a compare and contrast for VG. Actually, I'm writing it down right now. Do you have a price target for Nvidia? Yeah, I think Nvidia can go 175 to 200. And I don't think I'm being particularly creative there. I think that's where the sell side estimate is in that range on a consensus basis. The key for Nvidia is going to be their non-China business is going great guns. And it's going to accelerate. It's really impressive revenue acceleration for a company that size. But here is the rub. They need China. And last quarter, they grew so fast non-China that it overwhelmed the lost Chinese revenues, and they were okay. They still met the overall number. But as we go forward, and we're starting to lap some of these quarters of great growth, and that's going to be very hard to incrementally add revenues if we still have this fiasco with the Chinese, because right now, China has an annual market for Nvidia GPU chips of about $50 billion per year. And right now, it's zero. They cannot ship a single chip. And over time, if they're not going to be able to ship into a $50 billion a year market, it's really going to hurt their growth. Nvidia needs that. AMD needs that. All of the other players in that AI chip supply chain need that. So the key is, I do think we will get to 175, 200. But if this is going to be a multi-year stock, we need the Trump administration to not only come up with reasonable tariffs for the Chinese, but more importantly for Nvidia and AMD to end those restrictions of Nvidia and AMD shipping their GPUs to China. Applied Digital. Yeah, so Applied Digital actually was on my short list. I'm glad I didn't act on it because yesterday the stock was up 50% on this deal with CoreWeave. So it's kind of a shitty company. I actually think that, X this deal with CoreWeave, which was really big for them, they would be in some trouble. But here's the rub. If you do the math, I believe CoreWeave is signing leases with Applied Digital over 15 years, $7 billion worth. And Applied Digital is a company that only does $200 million of revenue per year. And so if you just snap that on, this company gets a huge, huge, huge growth spurt. So what I would do is, because I don't respect them, I would not buy it. I definitely wouldn't chase it here. If you own it and it was up, over 50% in 2 days, I would either sell it all or I'd at least trim it. But I'm actually thinking once it steadies and this news is fully absorbed, I might turn around and short it. So that's my thought on Applied Digital. All right, so here's the last one. CRDO, do you have any sympathy plays on it? Sienna and others. I would tell you that in data networking, I actually believe a company that I used to poo-poo as being like, the dinosaur that didn't get it for many, many years, Cisco. Cisco has some very strong relationships in the Middle East, and Trump and company just traveled there. I think Cisco is going to do some big business in whether it's Saudi or UAE or wherever. Also, they're starting to grow faster. Maybe this company, after long last, can get back to a double-digit revenue growth, compounded annual growth rate. So out of this entire crew, which I say, let's say that they're AI-centric data networking companies, they're providing the plumbing to put all this together. I would go with none of these that you have here. I would go with that dinosaur who somehow came back to life, Cisco Systems. So with that, everybody, thank you. If you have any follow-ups, please reach out to Harvest Portfolio Management right here where I run my tech model. Reach out to Benzinga. I'm super easily found. Just click on my LinkedIn profile. Anyway, I am at your service, and I'll see you next week.